He's a rational investor, dividend digester, saves some of his paycheck just like all his ancestors. Him looking for high yields, that's never the case. He's seeking 6% return, slow and steady wins the race. We pay our debts in our currency that might be unfurled if it's no longer the reserve currency of the world. Confidence in the dollar is permanent, just ask any scholar. People are exchanging their dollars for dog money. Dog money? Dog money. Dog money. We trading it in for dog money. Dog money. Dog money. Dog money. Dog money. I'm putting it all in dog money.
Alrighty people, good afternoon. It is just coming up to 10 to 1 on Friday, the 4th of June 2021. Welcome to Satoshi's Bitcoin Chart Show. This is the Bitcoin forecast, the strength of the system, the health of the network, where we find out what's up with what is going down and all around. So as we're in the, I'm starting to dedicate each show to an individual one day in the hope that we might get attention, from a shitcoin outside of the space. Today's show is going to be dedicated to this guy. Now, he calls himself Lex Clips. His name is Lex Fridman. It looks like a hitman, so I might call him Lex Hitman Fridman. Who's just recently done an interview with Vitalik Buterin. He's done a number of episodes in terms of Bitcoin. If we go to his channel, let's have a quick look at this. See all these other videos that he's done. So we can see, obviously he's Chainlink shit on there. Ethereum, there's Bitcoin. He's got Vitalik on there. Charles Hoskinson's, whatever. So anyway, fairly big name in space. 260,000 subscribers. I think I found him on Twitter as well. We might have a quick look at that in just a minute. But anyway, so the show's dedicated to him, and let's just crack on with it. So hopefully, I've just done a new picture. As a picture paints 1,000 words, to try and explain what Bitcoin is, so that these people can actually understand it. So without any further ado, let's just crack on with it. So in terms of the politics of the chains, as you can see, the Bitcoin protocol started on the 3rd of January 2009, and it hasn't changed. It's just simply continued, because when you tamper with it, when you change it, you centralize it and you crash its fundamental value to zero, which is what's caused all this hoo-ha. Now, only the intelligent people in the space that are all in BSV understand this, because Bitcoin is BSV. When you change it, it becomes worthless. So therefore, I literally couldn't give a monkey's about it. But what they've done is they socially engineered control of the ticker symbol, so that, intellectually challenged people don't understand what's gone on, as we'll hear in a minute from a few videos. But these are the 5 pillars of decentralization that are required to maintain a neutral network. Accountability, which is a chain of signatures. So obviously when you sign something, that says that it's you're taking accountability for that thing that you're signing for. Locked protocol, so that no one can change it. Infinite scale, so there's always new market to compete for. Competition in the form of proof of work. And a fixed supply, which means no one can control it. So a fixed supply is just as important as a locked protocol. But it's accountability in the chain of signatures that you need to attack in order to centralize control of the network, which is why a group of developers called Blockstream implemented SegWit on the 24th of August 2017. And it's all this shenanigans that caused the chain split. So they changed the protocol. However, they, like I said, manipulated control, socially engineered control of the ticker symbol, which means it's not Bitcoin, which means they shouldn't have the ticker symbol, because the ticker symbol was meant to represent Bitcoin. If you change something, you change the name to let other people know that it no longer does what it says on the tin. That's what Bitcoin is all about. So Lex, if you are listening to my show, just got a few funny videos that I like to go through, because you can hear all these charlatans just simply tripping up over themselves. Any intellectual individual will see right through this, so fingers crossed, hopefully you are. Just have a listen and see what you think. So the first one we're going to listen to is Samson Mow, the Chief Strategy Officer at Blockstream, making a Freudian slip here, telling everybody and admitting that Blockstream control Bitcoin. or which is BTC. Well, they control BTC. It's not Bitcoin. So have a listen. Here we go.
Bitcoin was created by the central bankers that enslave you today. It is their scapegoat.
How do you answer those, Max and Stacey?
I think the evidence is clear that they do not control it. There's 10 years, almost 11 years now of track record.
Yeah, Blockstream controls it.
I'm sorry, go ahead. Who does?
Oh, hear the alarm in their voices. Shall we have that? I'm sorry, go ahead. Who does? Oh, let's have a listen.
Blockstream.
Oh! Shall we cue the nervous laughter?
Oh, all right. I was looking at you when I said that. Yeah, I'm a block. I have a spy. I'm one of the spies. No, so this, it's an interesting.
It certainly is interesting. Max. So now we're also going to have a listen to Peter McCormack admitting that BTC is nothing like Bitcoin. Take the floor, Peter McCormack.
Bitcoin is so different now from when Satoshi was here. It's a completely different project. It doesn't matter who Satoshi is anymore. Even if Satoshi came back, I don't think he would just be immediately welcomed as having this God-given right to decide what happens with Bitcoin. I think he would have to earn his right back into the project. Bitcoin is built based on consensus now.
Are you sure about that, Pete? Because it didn't sound like it to me. Like it wasn't built on consensus before. Is that what you're saying? Absolutely ridiculous. And now we're going to have a listen to Daniel Krawitz interviewing Tony Vays, who is also a proponent of BTC. And just listen to this numbnuts and the answer that he gives. This is hilarious.
Why do you think BTC is valuable?
It's valuable because it's the only unconfiscatable asset we have, and that is because that comes from its decentralization. I think Bitcoin is the only valuable crypto asset we have because of the nature of how it started in its first few years.
And when you say Bitcoin, you mean BTC, right?
Absolutely.
But are you aware that in 2017 they changed the rules so that BTC no longer follows the Bitcoin white paper?
That is not true at all.
The white paper says that there needs to be a chain of signatures.
Sure.
Okay, so that's not what we have anymore. That's how SegWit changed that.
Okay, but it's still Bitcoin.
Unbelievable. So when he mentioned there about the nature of its decentralization in the first few years, this is because Bitcoin is a commodity. So cash is the most liquid form of money, and money has to be a commodity. It is not a cryptocurrency. It is not a security. Now, in order for it to be a commodity, it has to be common to everyone, which means you have to decentralize the starting point of the network. So in order to give Bitcoin as much credibility as possible, Satoshi Nakamoto, aka Craig Wright, released the white paper on the 31st of October 2008, and yet he didn't start the network until the 3rd of January 2009, which was 2 months and 4 days after he'd released the white paper, to a cryptographic mailing list. He didn't just simply release it and send it to his local supermarket. He presented it to a group of very competent individuals who would have understood what they were looking at and could have started the network anytime they wanted, because they'd been given all the information that they needed that was all in the white paper, clearly outlined and defined with instructions on how to do it. However, because he released the white paper, it was his duty, it was his obligation, responsibility to provide that reasonable amount of time. So 2 months in law is often considered a reasonable amount of time. So 2 months and 4 days. 2 months time period, done. Then he started it under a pseudonym. Now, the reason he started it under a pseudonym is because he'd written the paper in English, released it to the Western world on this cryptographic mailing list, but giving himself a Japanese pseudonym, which again decentralized the starting point of the network into 2 parts. You've got the paper and you've got the author. Now, the author being Japanese over the opposite side of the world to where the Bitcoin paper was released. Japan also being technologically advanced, highly developed, and politically neutral, it meant that people were less suspect about his intentions and his motivations and where he got his education from. Japan also has a language barrier, but it also has the size of population that would enable him to stay hidden for as long as possible while the network grew without that central point of authority, control, or influence, as in like its organic growth. Now this period of growth over like 10 years is what gives Bitcoin its fundamental value. Imagine something like gold, like a mineral, already being in the ground. Well, how did it get there? That's the issue. So you had to get Bitcoin out there, but it had to grow organically. Because if it didn't grow organically and it grew with a central point of authority, control, and influence, it would undermine the credibility of the network, which is why he had to step away from it. However, when he stepped away from the project, because it was a commodity and it wasn't centrally controlled by anybody, he knew that it could be tampered with, and he knew that some developers would probably try to centralize control of it and prevent it from working, because obviously there's a lot of money on the line here. And this is why he set up the Tulip Trust, which I'm just going to show you here. Check this out. It's this one, Tulip Trust. So Lex, if you haven't seen this before, I'm just going to explain it. Whoa, hold on. Turn that down a bit. There we go. I think we can see this all. So this was the Tulip Trust. And as you can see here, let me see if I can't move that page over, unfortunately. There we go. That looks better. So you can see here, Lex, if you're watching, it says, to whom it may concern, CC Dr. Craig Wright. I acknowledge the trust and the transfer of the Bitcoins to the trust. I have full control of the software and the keys used to manage the Bitcoin as of this date, Thursday, the 9th of June, 2011. And it says here, I agree that I, Dave Kleiman, shall become the trustee of the transfer of the Satoshi I've received from Craig Wright. No record of this transaction will be filed in the US or Australia. The transfer is valued at $100,000 US dollars for Australian tax purposes. And he says, I, Dave Kleiman, have received 1,100,111 Bitcoin from Craig Wright. At the time of this transfer, it's valued at around 100,000 USD. So it's about 10 cents per coin at the time. He says, I will form a trust to be managed by at least 3 people, but no more than 7 at any time. All Bitcoin will be returned to Dr. Wright on the 1st of January 2020. Now, the idea of this Tulip Trust was to act as Bitcoin's insurance policy, so that when the 1st of January 2020 came around, if Bitcoin had been tampered with and centrally controlled and basically had no fundamental value anymore, this insurance policy would be used to wipe it off the face of the planet. That's what it was for. And so now that the 1st of January 2020 has passed, we are now past that period of speculation and neutral growth. We're now in the period of adding value. And Craig coming out and revealing who he is all about adding credibility to the network. But obviously this doesn't suit the political narrative to those higher up who don't want him to be Satoshi, who don't want Bitcoin to work, who are telling everybody that it's a store of value, you're not meant to use it, we'll keep the block size restricted, it's like digital gold, it's like digital dog shit, and all this kind of stuff. It's not a peer-to-peer electronic cash system. Well, if it's not a peer-to-peer electronic cash system, it's not Bitcoin. It's as simple as that, Lex. So, yeah, I mean, if you want to speak to me some more about this, please let me know. I'm more than welcome to have a chat with you. So as the protocol just simply continued, again there was another group of developers that also wanted to take control of the Bitcoin and have it their own way, led by Roger Ver. But by making it anonymous and non-regulatory compliant, it means that global trade and international commerce can no longer use it. And if you don't believe me, have a listen to this.
I have a question here from Satoshi, defender of Bitcoin. He said, if a cryptocurrency is anonymous, like BCH, I don't think BCH is anonymous, but maybe there is something.
Check out cashfusion.com and you combine that with reusable payment codes and you get Bitcoin Cash in the same sort of ballpark of privacy as Monero. It's really awesome. So you can check out cashfusion.com. And I always get it wrong. I think it's .com, but it might be .org. So you can check both, cashfusion.com.
Okay, awesome. So BCH, maybe using Cash Fusion and XMR, if they're anonymous, how can a business get legal recourse against a supplier if the supplier defaults and no proof on the transaction exists because anon?
Yeah, if you want your cryptocurrency to be perfectly legal for everything all the time, just go use your Visa card. Just go use your PayPal, right? What do you need a cryptocurrency for? You can do all of it with a centralized, fully legal and fully compliant payment platform, right? So go use PayPal. I think you've missed the entire point. The entire point of cryptocurrencies is that by technological design, they are beyond the reach of the law. They're above the law. That's why, imagine if Bitcoin could have been shut down by governments, they probably would have shut it down from right out of the gate. And it's the fact that Bitcoin can't be shut down. We should ask the BSVers this: if they pass a law saying BSV needs to shut down their blockchain, are they going to obey and shut down their BSV blockchain? I hope the answer would be no. Which is just, a lot of the stuff I see from some of these BSVers are silly. But then there's other BSV fans that, I'm very, very sympathetic to their way of thinking. But the ones that say that the blockchains all need to be legally compliant about everything all the time, just go use your Visa card.
Unbelievable. Just honestly, the level of intellect in this space is just absolutely shocking. But there we go. That's why Bitcoin just simply had to, the protocol had to continue under yet another ticker symbol. But it hasn't changed. It's just simply scaled. So I've drawn a picture to demo this right here. This is my explanation of Bitcoin. So at the moment we have the entire world here, and everybody is uploading their data onto corporate servers. And corporate servers track, monitor, and sell people's data under the guise of being free. That's how corporates make their money. However, if you don't want your data to be sold, if you want privacy over your data, if you want sovereignty over your data, you just simply upload it to the Bitcoin network. But the way you upload it is you upload it using Bitcoin. And it's miners who get paid in the Bitcoin for uploading and processing that data, putting it onto the Bitcoin network. Now, the Bitcoin network has infinite data storage. It is unlimited. So the only thing that matters is how much and how fast the data can be uploaded. And with Bitcoin over time, it gets faster and cheaper the more and more people use it, because the more and more people come in to use it, the more valuable Bitcoin becomes, because it's fixed in supply. So if more and more people want sovereignty over their data, it means that Bitcoin has to be divided further and further and further because it's fixed in supply, which means the value simply goes up and up and up and up and up. That's the way it works. It gets its value from its utility. And not only can it just simply be, used for people uploading their data, literally, music files, videos, just, family photos, wedding videos, or anything like that. Because it has value with people using Bitcoin to upload their data to the network, which data sovereignty, it means that it can also be used as a medium of exchange, which is cash, which increases its use even more. Everything is about utility. Everything is about utility. It's the most amazing system that I've ever come across in my life. So as I've said here, like utility, with people using it, uploading data onto the blockchain, and then as an asset, because the Bitcoin network obviously produces Bitcoin as they're mined, but the rate of production gets cut in half every 210,000 blocks. Until eventually the network is just simply self-sustaining through fees in the block, purely from the volume of transactions that people are making using the network, which we'll get to in a minute. But again, get in contact with me. I'll explain this all to you. In fact, I might explain that to you now. Actually, here we go. Check this out. So as the block, so there was initially 50 Bitcoin per block, and each block is produced approximately every 10 minutes, and every 210,000 blocks it gets cut in half. So it went from 50 Bitcoin to 25 Bitcoin to 12.5 Bitcoin to 6.25 Bitcoin, which is where we are now, and then it'll soon go to 3.12 Bitcoin. Now, as that happens, and the amount of Bitcoin that are rewarded in a block gets cut in half, it means that miners have to make their or have to economically sustain the network through something else, which is the fees in the network. So as you can see here, I mean, it says anticipate crossover. It's not anticipated Q1 2021 anymore because of other political issues that have happened, but for the better. But this is what would happen. So fees in the block would go up and up and up. So we're just going to let Laura Shin actually explain this in one of her interviews. So have a listen to this.
So, as you mentioned, at a certain point when the block reward stops, there will be a transition where miners will be compensated in transaction fees, not in the block reward. And the current amount that they earn is from fees is about 9% of the block reward. And so we'd have to see transaction fees 11x by roughly 2140, which is when the new Bitcoins will stop being minted. But I just wondered, if we don't see an increase in the amount of transactions that can happen at layer one, because the number of layer one transactions is limited. And right now, I feel like a lot of the scaling is focusing on layer two. Can transaction fees 11x in that time, or will that require people to pay a lot more per transaction?
The KPI for this for what we're looking at right now, which the question we're trying to answer is, are transaction fees replacing the block subsidy in the block reward? So are newly minted coins, are they, as those decrease, is that value being replaced by the subsidy? And so we can calculate that. That would be our primary KPI. So you could look at transaction fees over the subsidy, transaction fees in a block divided by the subsidy, and you brought up that that's at 9%. If we look at that historically and we make it like a rolling 60-day to smooth it out a little bit, and we look at this over time on a log curve, it's very much trending in the right direction, where 11x sounds like a lot, but Bitcoin moves in really intense cycles where we've all seen it go from 1,000 to 10,000 or 20,000. When that happens, that means there's not an equivalent, but a directional rise in transactions and transaction fees. And so we have seen transaction fees replace the subsidy over time. And so it very much is trending in the right direction to where over the next couple halving cycles, we should see it start to predominantly be the value that is compensated to the miners in the block reward. If Bitcoin doesn't become adopted, if it remains a more niche sort of a service for humankind where only, let's say 20 million people use it, well, then its long-term security will be weak. If Bitcoin is the world reserve currency that doesn't have a strong security model, like there's not a lot of monetary compensation in the block reward due to transaction fees, well, will that be a bad scenario? Well, it's an impossible scenario, because if it is the world reserve currency, there will be very, very many layer one transaction fees.
Okay, yeah. So it sounds like you think it is possible people might consider that because, or rather, it's possible that the amount in transaction fees will maybe not be enough on layer one to replace the block reward when the time comes.
Absolutely, she's right there. BTC is purposely only capable of doing 7 transactions per second, and that's if all the stars align. 7 transactions per second wouldn't even service my local supermarket. There is no way that BTC is going to be the reserve currency for the world. And when he says, oh, there'll be many transactions, there can't be, because it has been purposely restricted. And it is centralized, and it's been purposely restricted by the centralized entity, Blockstream, that control it. Now, if you don't believe me that sort of Blockstream have got ill intentions, just have a listen to Adam Back, who is the Chief Technical Officer or Chief Executive Officer of Blockstream, explaining what he thinks is acceptable for Bitcoin. In terms of payment times and what people could possibly do. Have a listen to this.
Hi Adam, I got a question from a live viewer. So it's from Arnhem. In Arnhem they have the Arnhem Bitcoin Stop initiative, which has got like 100 restaurants and bars and shops and all these sort of, they're actually accepting Bitcoin today. So they're kind of struggling with the fee situation right now. So they're kind of looking for a solution that's ready today, like something they can use as soon as possible. Now, one solution you mentioned is to use off-chain services where people could put a little bit of money somewhere off chain at some service provider and payments happen off chain. The other solution would be to use an altcoin that has very cheap fees. Do you think one solution is preferable over the other, and if so, why?
So, fee estimation in some cases is quite bad. If you're paying a friend, you can probably afford to wait 4 hours and not pay a priority fee. So I'd encourage everybody to get a wallet that allows you to override and set your own fees, set them lower. Make sure to turn on replace by fees so that you could increase them later if you guess too low. Lightning, maybe they could be an early adopter of Lightning, but
that's not really ready yet, so.
Well, you can download and make transactions and stuff, but I agree that the wallet integration is not complete. You could have, I think some Bitcoin businesses have a tab, so you pay them and then you work your tab down and presumably you can cash your tab out if you don't use it, if they have repeat custom, or maybe the shops in the local area could make a shared tab or something in anticipation of, somebody in the local area who's a technology expert could make a local Bitcoin tab that's interoperable between the shops and some kind of app to do it.
Thanks, everyone. Thanks, Adam.
Yeah, that's right. Just find a local technology expert who clearly knows more about Bitcoin than the CEO of Blockstream that you just heard speaking then. Absolutely ridiculous. So anyway, now we're going to jump into these figures so you can actually see what is going on right now. So this is Bitcoin here, currently at $172. Preve saying 187 in the top left of the screen frame. Bit of a difference in arbitrage there. Different market makers, but never mind. So we've got hash rate. So again, I'll explain later that hash rate follows price, follows value, follows utility, follows creativity, initiative, and intelligence. If you are intelligent and you apply creativity and initiative, you can make something useful. When something is useful, it can then create value. When it creates value, it can then develop a price. When it develops a price, it can then be measured against the cost of other goods and services and used as a medium of exchange. So hash rate will follow price as more and more people use it. The network nodes are those who are providing the hash rate, but then look at this. We've got transactions. Transactions is the current, is just literally like the transactions going backwards and forward. And Bitcoin has got 48.6% of the overall transactions on the Bitcoin network in comparison to these two shitcoins. But look at this block size. This is the data flowing through the chain. This is people uploading data that they want sovereignty over. Bitcoin is the largest ever produced data management storage system in the world ever. It's just absolutely sensational, which is why I'm passionate about it, because we need sovereignty over our data so that corporations cannot crack it, hack it, alter it, sell it, change it, delete it, do whatever. Like rigging voting, for example, stuff like that, inflating the monetary supply without people knowing. Data sovereignty is absolutely crucial, and it can only be done with a truly distributed, decentralized network that doesn't have a central point of authority or control, and that's what Bitcoin is all about. And like I said, the only genuine protocol is Bitcoin, which is BSV. So from here, we're just going to have a quick laugh at some of the block sizes. But if you're wondering why I call Bcrash, it's because Roger Ver calls it Bcrash himself. And if you don't believe me, have a listen to this.
And we're going to really spread Bitcoin Crash across the entire country here in Antigua.
Yes, you did hear that. He did say that. So we've got a 1.1. Is that a 1.7? Oh, 2.3 megabyte. Is that it? Dear, oh dear. Dear, oh dear. Absolutely pathetic. Now we're going to have a quick look at Coolcoin, but before we do that, we'll have our usual chat with Michael Saylor, because he's always so enthusiastic when he comes on the show. So Michael, welcome to the show. Thanks for joining me. So listen, I was thinking about changing Bitcoin, changing the protocol after you read the white paper. I was thinking about implementing SegWit and child pays for parent and replaced by fee, and developing the second layer solution so that eventually the miners will be starved and they won't be able to economically sustain the network, and the network will collapse. What's your opinion on changing Bitcoin, Michael?
I like Bitcoin the way it is.
Oh, good. Well, so do we. But how do you compete with that?
In fact, I love Bitcoin the way it is.
Well, you can't leave it there, Michael. You're going to have to explain what it is about Bitcoin that you love so much.
The way it's currently constructed, it is possible to put all $250 trillion of monetary energy.
Whoa, $250 trillion of monetary energy. I like the sound of that. Where's that going to go?
In big blocks of encrypted energy on the blockchain.
Wow, they sound like pretty big blocks. What sort of numbers are we talking about, Michael?
Maybe the Bitcoin will be $1 million. You can probably calculate $10 million of Bitcoin or something.
Whoa, $10 million per Bitcoin or something. I mean, where's all that money going to go and how's it going to fit?
Big blocks, $100 million chunks on the blockchain.
Is that right? Well, let's have a look for these big blocks then, shall we? 1.7. Good grief, they'll be lucky. Is that it? A 1.7. Oh, that is it. Shocking. Right, and let's have a look at Bitcoin. Let's have a look at this. So remember, Lex, if you're watching, look at the size of this block and compare it to the equivalent block on these other shitcoins over here. Look at 13 megabytes, 19, 18, 16, 15, 11, 2, 5, 1, 6, 12, 7, 7, 18, 67 megabyte block. Actually quite small in comparison to what we're used to looking at, but yeah. So you'll also see there are ultra small blocks on this network as well, and that's because there's a real hash war going on, because you've got shitcoin enterprises like Via BTC who basically want to scoop up Bitcoin without putting any proof of work into getting them. So Hathor has come in and started mining all the small blocks. Look at this, Hathor with a 7.87 megabyte block. I know that's not a kilobyte block. Hathor with a 2.4, Hathor with a 0.67 kilobyte block. That's 670 bytes. That's hilarious. Via BTC will be spitting feathers at that. Spitting feathers. Because all that Bitcoin, 6.25 Bitcoin for literally 670 bytes worth of energy. Bargain. Hathor another one, 2.51 kilobytes. Brilliant. Brilliant. Absolutely hilarious. So Lex, this is the hash rate. As you can see, like I said, hash rate follows price, follows value, follows utility, follows creativity, initiative, and intelligence. You know, so it can be used as a medium of exchange. Proof of work by network, yeah. Bcrash Bitcoin will, Coolcoin will just simply fall into their own footprint one day. Bcrash Bitcoin hash rate, Bcrash Bitcoin proof of work. It is 17,000 times cheaper to transact on Bitcoin than Coolcoin, which is probably, yeah, about 12, 13 times also cheaper than Bcrash. It is 424 percent more profitable to mine on BTC than it is BSV. That shows you competition for BSV is heating up, because look, it's more profitable to mine on BTC, which means there's competition for BSV, the genuine Bitcoin. These shitcoiners are starting to catch on. Daily average Bitcoin block size by network. Look at this, Bitcoin absolutely smashing it. Transactions by network, Bitcoin winning. Transactions per block, Bitcoin winning. Fees, USD, so this is fees in the block, which we'll get to in just a minute. So it's not fee per transactions, it's fees in the block. This is Satoshi fees in the block. So this is block reward ratio to fees in the block. Again, percentage time, percentage measurement will monitor that over time. But look at this, Lex. Daily accumulated Bitcoin blockchain growth by network. Yes, indeed. Let's just enlarge this. Check it out. Here we go. So as you can see, this was the genuine Bitcoin protocol. So initially it followed the yellow line, then the original protocol, obviously it branched off and it followed the green line, then it branched off again and got out from underneath the hands of these shitcoiners and nefarious entities who want to prevent it from scaling and prevent it from ever being used and be unregulatory compliant. And now it follows the red line, and look at this, look at that, there is more data weight on chain. Loving that. Look, we can enlarge that. Zoom in. Look at this. Look at that. Beautiful. As they say in London Underground, mind the gap. Love it. Love it. So we'll just see how big that gap actually is. We're looking at more details. Here we go. 13.21 gigabytes. The Bitcoin blockchain has grown by 13.21 gigabytes, more than the Coolcoin BTC chain. Absolutely love it. Absolutely love it. Let's have a look at the hash rate, because this is where the politics is. Global hash rate 7 days, global hash rate 24 hours, more relevant here. Ooh, other mining pools. Large amount of hash rate on there at the moment. Compare that to Core Coin, as Core Coin's got what, like 98%, 97.8% of the overall hash rate. So yeah, it's going to look similar. Yeah, this is B Crash, like a complete waste of time and energy. That coin, just complete shitcoin enterprises on there. And this is Bitcoin. Look at this. Tau, 56.94% of the overall hash rate on the network. Hathor, 28.47. Good to see mempool, Norpool on there. F2 pool being squeezed. They're desperately trying to get some. Via BTC being squeezed. BTC.com being squeezed. These are all the shitcoin enterprises. So that's good. We don't really want them mining the chain. So squeeze them off so they don't have any. Good to see Matterpool on there. 0.6%. SV Pool. Good to see them on there. Excellent. Loving that. So Lex, the reason we're squeezing all these shitcoin enterprises off the chain is because they are artificially suppressing the price, which we'll look at right now. So have a look at these short positions. So they started off a month ago at 92%. And now they're 89%, so they've lost their bottle a little bit. But these are shitcoiners like thinking that they're going to short Bitcoin, which is BSV. Oh dear. Let's have a look at the Bitcoin blockchain working live in front of our eyes. So if you've not seen this before, Lex, these blocks moving across the top of the screen are the transactions being recognized by the nodes on the network. And these are the mining nodes. Now, as soon as a transaction is broadcast to the network and is picked up by more than 50% of the nodes, it is confirmed instantly, and it is also picked up instantly because it is an ultra small world network. Literally, the moment the transaction is broadcast, it is confirmed. And then you can see the transaction generators down here. Once it is confirmed by the nodes on the network, it's thrown into the memory pool, where it is competed for by the miners and payment processors in order to create a block, put the transaction in the block, and then place the block on the blockchain, which we can see down here, which is then they're rewarded with the Coinbase data, otherwise known as the block reward, otherwise known as freshly minted Bitcoin. So if you see on this particular block here, which is 67 megabytes, in the highlighted rectangular blocks below, there's got the hash of the block height, who it was mined by, the size, the time, the date, the transaction count, and the total fees in the block. So total fees in that block were $69.61. So the miner also gets 6.25 Bitcoin along with $69.61 in Bitcoin for paying for the transactions. So it's this total fees in the block that is going to absolutely skyrocket when huge transaction volume starts coming on chain as people start wanting data security, data sovereignty, and data efficiencies. And when I say data efficiencies, imagine all the financial institutions in the world. You know, if they were to lose a single customer, a record of a customer's transactions, they could be fined 10% of gross global profits, because it is trust that underpins the entire financial system. So what they do is they read once and write many, record the transactions in multiple locations, and employ different service providers like Amazon Web Services, Microsoft Cloud, in the hopes that the data will always be retained, so they have a backup. Now they can get rid of all that, and they can just simply upload it to the Bitcoin network, because the Bitcoin network is a decentralized, distributed, single ledger network. So you can be sure that that data is safe and secure. And the cost of uploading it is literally the cost of a micropayment in comparison to the amount of money that all these financial institutions spend actually trying to secure their data. It's just absolutely phenomenal, Lex. So if you want to chat more about this, please let me know. Just going to have a charts quickly, see if there's any more movers and shakers for my usual watchers. Alright, always worth checking. There we go. Check this out. So if you're wondering why that screen blows me away, it's because all of this that you see here goes towards processing those transactions and making sure that data is secure. All these mining farms, look at the amount of investment and hardware that has gone into that to making Bitcoin absolutely sensational. So this is the overall network here, BitInfo chart. So Bitcoin has got 11.4% of the overall network, so of the entire shit show, not just the Bitcoin network. So you can see that you've got Ethereum here, again, complete shit show. No value on the chain whatsoever. And XRP. So XRP, again, a centralized project, pre-mined, a total security. And we'll just have a listen to David Schwartz, the Chief Technical Officer at XRP, explaining that it's same but different. Honestly, this is absolutely hilarious when you hear this. If you have any intelligence whatsoever, just listen to see if you can see the hypocrisy in this.
Pleasure to have you, David. All right, so I was hoping you could comment perhaps briefly on this piece of news out this morning. Is Ripple hoping to find evidence that XRP is similar to Bitcoin and Ether and should not be considered a security?
Yeah, I think the primary argument that we're trying to make here is that the market considers them similar. We considered them similar. All of the evidence suggested that they were similar, and then the SEC just, comes out of nowhere and say, nope, they're completely different. Ripple's a company. We're based in San Francisco. We have employees. We have shareholders. We have a CEO. I work for that company. I'm the chief technology officer. And it's a company like any other company. It's centralized. What the CEO says goes. There's a board of directors. It just works like any other company. The XRP is a digital asset. It's censorship resistant. It's publicly traded. It trades on the XRP ledger. Ripple does not own or control the XRP ledger in any way.
So how did Ripple then get all the XRP that it has? It has about half the supply. So just how did that particular transaction happen?
The XRP ledger has a very different design from what Bitcoin and Ethereum have, and many other digital assets. Like in Bitcoin, the stakeholders are at least to some extent the miners, and the miners reap the rewards of the transaction fees. The XRP ledger doesn't work that way. It is not competitive. Nobody's competing to reap fees. Because it's not a competitive system, it doesn't have any way to sort of award fees to a particular party. Because although if it had a way to award fees to particular parties, people would compete for those fees, and it would become competitive. So the way it's design works is when the ledger first began operation, the 100 billion XRP, all that will ever exist, were sort of up for grabs. And lots of people grabbed XRP out of that system, but it just so happens that obviously, just like early miners mined, huge amounts of Bitcoin before the public knew about it or was using it, early XRP users grabbed large amounts of that pool of XRP. And so the people who developed the ledger wound up with, the vast majority of it, and then have been distributing it since then.
Yeah, thanks, David. Same, but different. So that's how the developers end up, because they grabbed it. You think you're going to get away with that in a court of law? Well, the definition of grab. They grabbed it. So what you mean is they developed it and they took it because they developed it. That's how they ended up with most of it. That is a security, David. You absolute nincompoop. Huh. So Lex, if you're watching, just going to show you transactions last 24-hour basis, over 3 years on the log. Look, you can see which one is Bitcoin. Yes, indeed. Beautiful. Scaling test network, just checking the figures here. Look at this, 5,124 transactions per second on the mainnet. Love it. And there's actually a 638 megabyte block on the mainnet, but we'll let them off. Trends.cash. Wow, look at the amount of money spent on TDXP app. Oh my goodness. Apps ranking by performed actions. You've got run crypto fights with almost 30% on there now. TDXP up 3.1, Twitch 2.5. But again, sort of like Meta and BN Protocol and these other ones. These are all large institutions testing out the network. Watch this space. Absolutely beautiful. Crypto Quant, so again, this just simply shows you this is BTC All Exchanges Reserves. These are the exchanges, Lex, that have all been cashing out because they know, over the last 18 months, because they know that Coolcoin BTC has got no fundamental value. So you're not going to start, shouting your mouth off, telling everybody that it's got no fundamental value when you're holding vast amounts of it. So they've been dumping their bags slowly. But while they've been dumping their bags, that's been causing a liquidity squeeze, which has caused a spike in the price. But it's a bubble. There's no value in this whatsoever. That's what the exchanges have been doing, crafty, and now they're just simply carrying on doing what they're doing, pumping and dumping, because that's how they make their money, Shocking. What's on chain again just proves that Bitcoin has got utility. We've got estimated next block size 1.1 megabytes, mempool usage 3.99. Always good to check that. This is what a mempool should look like. Data comes in, then it gets cleared. Vast amounts of data comes in, then it gets cleared. Vast amounts of data comes in. Look at the amount of data all getting cleared. That's what a memory pool is meant to look like. What it's not meant to look like is a swimming pool like this, where they can't clear the data. And if you want to see what result that has, well, just have a look at TX Street here. Look at this. So even though the memory pool size, only 0.88 megabytes. We've normally seen that as high as, like, I've seen that as high as like 90 megabytes that they're trying to clear using 1 megabyte block sizes. But look, nobody's using it. No one's using it because of the price crash. They do not trust it as a medium of exchange. And Coolcoin has no other use case other than a medium of exchange that takes absolutely ages and costs a fortune to send. Look at this. Look at this. So median fee $1.97, so or $2.01. So if you want to buy a cup of coffee, you've got to add $2 on top of that just for the privilege, and you've probably got to wait like a week. Absolutely crazy. But let's just see if is there a low fee line on Coolcoin. What's going on? All right. So this is Ethereum. I mean, look at all these transactions that are below the low fee line. So they haven't paid enough gas to get their transaction confirmed. I mean, look at this. Absolute shocker. Absolute shocker. So yeah, that's what happens. But so that's a complete shit show. Look at our shit show. Yes. I mean, look at the amount of money that's just simply being printed. And if you want to understand the significance of the amount of money being printed, just have a listen to this.
The system is inherently unstable as a result of the international power it provides to the dominant parties. For at the heart of it lies the idea of, how can I get something for nothing?
Statistical analysis has found that every time an empire begins to near its own demise, you'll find that its currency will be debased.
There we go, and that is exactly what we're witnessing here. Its currency being debased. Debasement in fiat currency comes from excessive printing, and this is absolutely insane. And we know where this has gone as well, but I mean, we can even have a look at the velocity of money. Is it doing anything? Is it stimulating the economy? Well, I doubt it. So where's it going? It means it's going into stores of value. Look at this, velocity of money. Off a cliff, and luckily my spies in my network have sent me the continuation of the graph. Look at that. Look at that. Absolutely off a cliff. It's doing absolutely nothing, which means it's just going into stores of value, making the rich richer and the poor poorer because it's reducing their spending power. So knowing that Bitcoin is the only thing that can save us, how are we feeling about it today, CoinGecko? Feeling good? Oh, 66%, never mind. Let's have a look at the depth chart. 7.6 million bids versus 6.3 million asks. So the asks is they're asking for the sale. So they'll sell it to you, and the bids is they're like, well, we'll buy it if you give it to us at this price. So more buying pressure than more buying pressure than selling pressure at the moment. So here prices might be on the way up, but look, I had a massive downturn because of Elon Musk and these shitcoiners just paying attention to his tweets. Let's have a look at the price on Shitfinex. Here we go. Yeah, whenever you're ready, Bitfinex. Seriously? Alright, let's just close all these, see if that makes a difference. Close, 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 close. Close, 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 and close. Here we go. Small market got some movement now. Page is unresponsive. I'll just maybe wait. Wait for this to come up. Okay. Let's have a look at that's annoying. That's Bitfinex. I'll have to reload that page. That's BTC USD. Cool. See, look, that's had a right dump. That one. Good grief. Let's have a look at BTC BSV. So BSV kind of holding its own. Good. Alright, let's see if we can find BSV USD on Bitfinex. Here we go. Oh, here we go. It's going to show us now. Or is it? There we go. Oh. Price has been dumping. Price has been dumping. Look at all that up here. 188 down to 171. Never mind. Let's have a look at the shitcoin market. Ooh, shitcoin is not going to be happy with that, are they? Dear, oh dear. Look at that. Anything to protect number going up. Ooh. Down on the week. Down on the month. Down over 3 months. They're still selling when that they still will try to tell you that we're not in a bear market, dear oh dear, but you know, it's definitely coming down. Definitely coming down. Let's have a look at Bitcoin just quickly. The genuine Bitcoin. Here we go. Down on the day. Oh, still up on the week. Nice. Down on the month. Lovely buying opportunity here. Loving that. Look at that. It got as high as $450. And now we're down at just like 170. Crazy. Crazy. Didn't think I'd see these prices again. Let's have a look at Bitcoin. So again, this is kind of interesting. If you can actually go to your analytics on your on my videos here, which we're going to have a quick look at. Here we go, analytics, engagement. So average average viewer duration, just like 9 minutes 26. So that's the average viewer duration. So obviously some are a lot longer, some are a lot less. But it's the same with most videos. It's between it's about 10 minutes. That seems to be the attention span. So maybe I might have to start fighting fire with fire and do the same for my shows. 10 minutes. I mean, I'm looking at the clock now. It's like 51 minutes, so it is kind of epic. But you know, I know that people appreciate the content, intelligent people anyway, because I'm actually giving them a full-on education here on Bitcoin. Streamanity, 284 followers. Yeah. Let's have a look at Twitch stats. Oh, 154 views in the last 24 hours. Good, that'll do. Let's have a look at Ruthie's tweet quickly. 967 likes now. Let's have a look at Arman Satoshi. 78,000.6 followers. Yeah, normally we look through Tether printing, but we'll just go to stablecoin printer to see if anything has come up here today. Close the show off quickly. No Tether printed in the last 24 hours. It's all USDC. My. Good grief. Would you believe it? Right, people, we'll leave it there. So, yeah, hope you enjoy the show. Lex, I'm going to put your picture on the thumbnail for my show. So if you want to reach out to me, you can reach out to me on Twitter. And catch everybody soon. See you later. Get paid for posting your pics on Relica. Download the app now at www.getrelica.com. Get your tweet etched on Twitch, forever on the Bitcoin blockchain. Do it today at www.jointwitch.com. BuyBSV.live, the best place to buy Bitcoin SV online. Support independent content creators on micropayment platforms such as Streamanity, Twitch and Relica. We should profit from our data, not the large corporations who track, monitor and sell it. If you enjoy the Bitcoin content that I produce, please support me by heading over to www.satoshi.tv, where you can keep up to date with all the latest news, gossip and content as it's created. Thanks very much. To get started in Bitcoin, go to freebsv.com, where you can claim your free Bitcoin. Then head over to Twitter and follow @IamSatoshi, where you can take part in his very generous and world famous free giveaways. The future of advertising meets the power of Bitcoin at Tonic Pow. Get paid for posting advertising campaigns to your social media profiles. Go to www.tonicpowads.com.